ratings agency Moody's has cut South Africa's sovereign credit rating to sub-investment grade. This means that the country now has a junk rating from all three major international rating agencies. The downgrade to junk status comes on the same day that South Africa entered a 21-day national lockdown. Newzroom Afrika's business editor, Xolani Mbanjwa, is here to explain more of this to us. A very good morning to you, Xolani. Thank you so much for joining me this morning.
Thank you very much, dear.
Now, just to start off by explaining to our viewers what exactly this downgrading by Moody's means to us. I mean, just recently we heard the Reserve Bank announcing a decrease in interest rates by 100 basis points, and we were excited, looking forward to paying lower bond rates, lower interest rates, and now this.
Well, we are going to feel the impact of that 100 basis point, reprieve that we got, and we're going to see it at the end of the month, and we're going to see it with the rest of the other, loans and bonds and the car repayments, at least for the next 2 months. This particular credit rating downgrade, we will see the impact of it quite later on in the months, particularly because some of the things that affect government, such as the FTSE World Bond Index, where South Africa has to be removed, that is only going to happen in a month's time. But there is a very nice explainer about what junk status means for the average South African, and it's quite an important one to say that this was released by the National Treasury to explain that exactly what junk status means to you and I, starting with more South Africans that will be paying interest on their loans. It's not only South Africans that are going to be paying interest on their loans, but the South African government on any loan that they take. We shall explain that a bit later.
And then also with regards to food and petrol prices, I know that April was set to have a historical decrease in the in the price of petrol, the price of diesel, and illuminating paraffin. So what does this downgrade mean for that as well in the near future?
It may not last as long as we hoped it would last, and that's because people are sitting at home. We are getting this, reprieve when it comes to the petrol price hike while we are sitting at home, and the food prices are definitely going to increase, because we are actually making sure that we are keeping the food prices down at the moment because of the panic buying that has been happening, and protecting the consumer. But we are importing some of the stuff, and the petrol price is going to increase because we are the net importer of oil, and that means we are paying in dollars, and that also means the rand with which the dollars that we pay for the oil price is actually something that is very, very interesting, because it's going to affect how much we get. It's going to affect how much we can pay. The petrol price has gone down from $53 per barrel to today, in just a few weeks, $26 a barrel. We should be paying less, but with the rand going down, we actually going to be paying more.
And in terms of unemployment rates, with the current lockdown in place, we know that a lot of businesses might have to retrench their staff. Some businesses had to shut down completely for this lockdown period because they don't provide essential services. Some don't look forward to surviving beyond the lockdown. And then with the backdrop of Moody's downgrading us, what does that look like for the country?
It looks dire, Gail, because we heard from the ADCON group that they actually need a lot of money when it comes to making sure that they come back. They actually will not be able to come back. We heard Grant, the CEO, earlier this week, speaking that they might not be able to reopen Edgar's and the rest. We also had Jet stores may not be able to reopen, and that's just the impact on the lockdown due to the COVID-19 outbreak. And that will mean a lot of people will actually suffer, not only for those companies that are listed on the JSE, but for those companies that are not listed at all. A lot of companies are up in the air. A lot of entrepreneurs are not sure what's going to happen. If they do come back, they might come back with fewer people on their staff, and this particular downgrade means it's going to be even harder to access loans for those businesses, which is why right now we need to do everything we can to save jobs and save lives.
Now, moving on to the next page of our graphic here, let's just also focus, or shift our focus rather, to government. Government spending is going to be forced to cut down.
Absolutely, because now we are moving towards, borrowing money from those who can actually give it to us at higher interest. Currently, we are paying quite a lot. Just last year, we paid almost 300 billion rands on interest alone on our loans. The debt to GDP ratio has actually increased, which means that we are going to be spending more and more on just interest and spending less on the important stuff like health, education, social grants, and things like housing. So that is going to be quite a blow to many South Africans for whom those services are directed. And that's where South Africans are going to feel it as well.
You know, I saw a couple of countries, in different continents, as they were going into lockdown, their governments trying to put together some fiscal packages to try and cushion the blow on businesses. But I mean, already we're facing a decrease in employment, we're facing retrenchments. Will there be any possibility of job creation at all under this circumstance?
It's very, very low. There's low confidence when it comes to consumer confidence. There's low business confidence in South Africa. And when it comes to Moody's on Thursday, when it came to Moody's explaining what the impact of the coronavirus is going to have on the African markets, the lockdowns are actually very, very critical, because there is no productivity. There is absolutely no productivity, as we are facing some of the countries like Sierra Leone down for 12 months, Zimbabwe now next door down for 21 days. We are on our second day. There's no productivity. That a prospect of job creation is definitely going to be dented, and our current high unemployment is going to be even higher.
And you mentioned earlier on, Xolani, that the rand is weakening against the dollar, against the pound, against the euro. So even when we spend on importing whatever essential goods we require as a country, we're going to be paying more.
We are absolutely going to be paying more. So the most important thing as well to notice is that on the first day of the lockdown yesterday, we saw for the first time the JSE moving into the red zone. And it had spent 4 days in the green zone, and there was a lot of enthusiasm about the stimulus packages that the European government and the US, which is worth $2 trillion. There was a lot of enthusiasm, but that actually waned and actually died yesterday when we saw the markets actually down by almost 5%. And that's going to continue. That's expected to continue on Monday, particularly on the rand side when the markets open. And that's going to be very interesting to watch.
Well, you definitely will keep us updated on those figures. Let's move on to the next graphic, where I'd like you to just explain to our viewers what the ideal is when it comes to credit ratings, by the various like Moody's, for example, the credit rating agencies, the S&P as well. We've got the prime, high grade, upper medium grade, and lower medium grade. What ideal should we be aiming for as a country?
This is a very interesting and quite informative graphic from the National Treasury. As you know, there are 3 very crucial, rating agencies. And when it comes to that particular, rating, you've got Fitch, S&P, and also Moody's, right? And we are all downgraded to junk across all of them. Where we would want to be ideally is on prime, and it explains quite nicely that those lenders want to see you there on prime, on AAA. It's very hard to get there. Not a lot of countries can actually manage, or corporates or municipalities can actually manage to get a AAA prime rating. And they explain it in the Treasury here that the banks will offer you wine, tea, juice, anything you want. And because
just to get your money.
They are guaranteed that, if you are on a AAA rating, they are guaranteed that you are able to pay your debts. When it comes to the higher grade, we still want to be here. This is all investment grade. Here on high grade, they will offer you tea and water, but you will still pay. You've got lower interest rates to pay, and right there, lower medium grade. That's where we were before last night.
Yes.
That is exactly where we were.
We've just moved from that lowest point of where we'd like to be, where it's still looking green, green pastures from BAA3 all the way to a different page, which I want you to explain to our viewers now. We're in the red zone currently. So, Xolani, what does that mean in terms of the investors, the investment possibilities, opportunities that the country now has?
So if we can turn to the next graphic, which is quite important, because this is exactly what where we are. BA1, non-investment grade. It's speculative whether we are going to be able to meet those demands of paying back on our loans. And number one, when it comes to Moody's, they wanted us to deal with the electricity supply constraints, to deal with when it comes to the debt GDP ratio. They wanted us to deal with also the amount of time we spent in restructuring the economy. They wanted us to also speak about, to also challenge and actually deal with a number of other issues, including the SOEs. They gave us 3 years. We didn't do that. These ones are called the machonistas. These ones are willing to lend you money still, but at a very high interest rate. They will take your ID, your TV, your bed. So those conditions are quite harsh, and they will impact on the average South African. This is where we are as a country, and it's quite uncertain where we will be at the end of the year. But what is quite certain for now is that 2020 is the year of a recession.
Well, it's not looking good for South Africa as well as for the world at large. I want us to have a look at a quote from the finance minister, which will just pop up here on your screen. He said, therefore, to say we are not concerned and trembling in our boots about what might be in the coming weeks and months is an understatement. That was the finance minister, Tito Mboweni. Just before we go on break, Mr. Mbanjwa, please just explain what the finance minister is saying. He's been the one holding the torch of hope, telling us we will make it through, we will get investors, but now it seems like even he's giving up.
For Minister Tito Mboweni to say this when he has been quiet and gagged, so to speak, during the coronavirus, we've seen all, ministers coming up to address on the economy, on trade, on security. For him to say this is actually something quite serious. It's not an understatement that we don't know what's going to happen in the next coming weeks and months. There's so much uncertainty, and the one thing here that investors do not want is uncertainty.